Hello traders everywhere, Adam Hewison here with your midday market report for Tuesday the 13th of August. Well, here it is, almost practically the middle of August and only a couple more weeks left. The markets have been very lethargic. I don't think there's much left in them. I think they're all on the holiday too. But the big news today and what I want to share with you is the fact that a hedge fund manager made some really fundamental mistakes, not once but twice, and I want to talk to you about that. I also want to share with you that he also picked a very public battle with a very successful hedge fund manager, which is something you don't do. It just didn't make any sense whatsoever. So let's go to our portfolio manager. The first stock we're going to be looking at is Herbal Life. Now, Herbal Life, Bill Ackman was talking this stock down, saying it was a big Ponzi scheme, accusing the management of all kinds of bad things. And the reality is, Mr. Carl Icahn came in and bought the stock, and he bought the stock right around these levels right here. Okay, we kicked in our portfolio, our trade triangle kicked in at 44.93, and we're currently trading right up here at 65.96. Now we still think this market could go higher, and here's what we're looking at. We're looking at a move from this level right here, which is 25, up to here. We're just going to measure that down there. That's 55. So that gives us 30. And we're going to add 30 to the midpoint where it broke out right here, and we're going to call that 52. So we'll add 30 onto 52. That gives us 82 and 80. So we're looking at a target zone for this. I know 30 and 52 is 82, but I think our target zone, I'm getting ahead of myself, is 80 to 82 on this particular stock. It's Herbalife, the symbol's HLF. Carl Icahn is long, and Bill Ackman has a very large short position in here, which he's going to have to cover somewhere along the line. He has to admit he's wrong. So we'll see how that plays out. Let's go to our next market, which is another big doozy for Mr. Ackman, and that is going to be a stock, Penney. Now look at this stock. It's done nothing but go down. Look at our last signal here on our monthly trade triangle. It says 2040. Market's traveling at 12. I mean, it's 1280 right now. It's a new low. Mr. Ackman just resigned this morning from the board of Penney. It's probably a good thing because he hasn't done anybody any favors in this particular stock. It's just gone down, down, down. You may remember Ron Johnson was brought in to be the new savior and winner for Penney. Spent a ton of money with no market research, just a gut feeling. And that proved to be a very expensive mistake when all of the special coupons that Pennies was so known for just sort of flew out the window. Plus, you're really going up against the trend here because it's an online world and Penney is a brick and mortar store. That's the reality of it. So sorry to say this is a terrible trade for Mr. Ackman because the trend is down and he's been trying to fight it every time. We keep seeing undeniably new lows, new lows, new lows, new lows. What are you going to say? Somewhere along the line, you have to say, this is wrong. This is a piece of crap. I went out, and that's exactly what you have to look at. This market could be stuck down here for years. It could just actually go out of business. So let's clear the screen and go to our next market. The next stock we're looking at is Apple. We've been very bullish on Apple. As you know, we got our signal that came in right here, right around the 465.75 level, currently trading at 473.31. This is a new high. You cleared most of this area here. So it looks as though, again, this is a very large base capable of carrying this stock much higher. And we're targeting this market to go to the 550 area. So we're looking at 550 to 575. So that's what we're looking at on the upside for Apple. And I think this is all going to happen probably in the September-October period. On September 10th, they're announcing, or they will be rumored to be announcing, a new iPhone and possibly some other new toys for Apple fans and the cult of Apple. What people have underestimated with Apple, in my opinion, is the fact they have a very loyal following, and they have got credit cards for a ton, almost 600 million people. So that's what you have to look at. So let's go right to our next market and clear the screen here, and we'll go right back to our regular portfolio, and you can see the weekly trade triangle on the Dow is down, which means you should be out of this market. On the next market, on the S&P 500, that's still positive. The trend is clearly up, both the weekly and the monthly positive. We still see this market going to higher levels than we are right now. And I think that's the key thing to remember. So you see the breakout point. I'm just going to draw a very simple trend line here with the trend line tool and just just down there. So basically, that was the breakout point. You're sort of resting here. I think we'll see after perhaps August another push up to new highs. So moving along to our next market, this is the NASDAQ. The NASDAQ is clearly being helped by Apple, but it's clearly being helped by this market. And this is probably the strongest indices at the moment. So we still see this market going higher, and we expect that trend to continue and accelerate into September and early October. So let's move along to the next market. That's crude oil. Again, crude oil is beginning to, two things to remember with crude oil that I think are very, very important. And one is this potential double top and the support you have here. Now you also have somewhat of a little bit of a divergence here. You have prices going down this way, but you're not seeing momentum. Now watch the MACD very carefully. Once that crosses over, I think we're on our way. The other thing I think is very positive in this market is our trade triangles. You can see our intermediate term trade triangle is negative. If we turn that around and get it positive, but intermediate term trend, I have to say, is negative. So the plus 65 is really a trading range, and that's what we have right now in crude oil. But let's watch this very carefully. Next market we're looking at is gold. Gold is trying to build a base. Intermediate term, the trend is up, and short term, the trend is up, but the longer term trend remains stubbornly down. We really have to do a little more work in this market, I think, to get it going. But again, look at the way the momentum is on the MACD. You're really seeing some sort of trend. You know, it's moving up. So you're getting lower, and finally, but this is not as low as this one. So you're seeing a little bit of this momentum just sort of slow down a little bit, which is what you need to start building a base to push it higher. It's not there yet, but we need to build that base. And I think that's going to take a little while longer. Not so convinced it's suddenly going to zoom up, but I wouldn't be heavily short this market at this point in time. I'd be either out of the market totally or slightly long based on our intermediate term trend right here. So let's clear the screen and go to our next market, and that's going to be the euro. Again, the 134, we talked about this level before being a major resistance zone right here, and that's exactly what's happened. The 134 level has proven to be a major resistance. We're down today, and we could see this market come back further than we are right now. And let me just put a Fibonacci number in here so you can get an idea of how far potentially this market could come back. So grabbing the top here and dragging this down is easy to do with MarketClub. You can see we can get down to the 130.80 level without too much of a challenge in my mind, and possibly to the 130 level if we really get a lot of pressure. But generally speaking, I think we'll see a little bit more of a setback. Longer term, the trend is still positive. Intermediate term trend is positive, but the very short term, that's today's, is negative. So I'd be probably out of this market if you're not already in it for the long term. So that's our suggestions, and we're going back to our portfolio. We've covered all the markets: Apple, Penney, Herbal Life. And remember, don't do what Bill Ackman does. Don't get married to a position and defend it at all costs. Take your losses when they occur and let your profits run. That's the key to being successful in the marketplace. I'm Adam Hewison for MarketClub. Every success.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.